So I figured I would do a live stream since the silver price is close to $14, and what does silver around $14 an ounce mean? And if it goes lower, I'll also give my thoughts on that. But first, I have to do a stupid disclaimer. So anything talked about on this podcast is not financial advice. It's my opinion. It's for information and educational purposes only. If I answer listener questions, it is not financial advice, just my opinion. Again, do your own due diligence. Contact a financial advisor. So, stupid disclaimer is done. I am pulling up my Kitco chart. When we're starting this live stream, we are at gold a little bit below 1200 at 1198.2 and silver at $14.19. So, as many of you guys know, I cover the gold and silver miners pretty extensively. And the gold and silver miners, well, things have been getting worse since Q1 of 2018. So, back in Q1 2018, if you've seen my other videos throughout this year, the miners actually had pretty decent margins. Metals prices were high, oil prices were lower than they are right now. And so for posterity's sake, let me just bring up the oil prices so we know what we're talking about. WTI crude is at $68.87. Brent crude is at $77.23. So if you want to try to figure out a lot of margins for gold and silver miners, you really just need to know metals prices, or if it's in a metal is in a foreign currency in another government, or the oil price. And if the miners can control their margins, it's not too difficult to figure out their margins, even if they're understating their costs with all-in sustaining costs. Okay, I have not seen anyone yet in the chat, and so I'm just going to continue on talking. So in terms of $14 silver, this is getting to a very, I've called it the danger zone, but things are getting... If silver stays below 14 for a while, and if silver gets into the mid to low 13s, that's about it. That's about it. Because, and I'm going to give you guys a case study on this because I want you guys to know. So, some of you guys have seen my short videos in the past talking about problems with the mining industry still with all-in sustaining costs. And if you looked at the miners' financials release from Q1 2018 and Q2 2018, they did not match the claimed all-in sustaining costs that the miners were putting out. So you've seen my Burack Gold case study that I put out in the last, 6 weeks or so, give or take. That's just one example. Burack is one of the lowest cost primary gold miners in the world. For primary silver, I've been saying for years now that the margins for primary silver miners are even worse than primary gold miners. And we've seen the evidence that we've seen in people like Jason. There's an idiot on Twitter saying that, Jason, you're way exaggerating things. If that were the case, then why are the higher cost primary silver miners, why have they for years now been going out and producing primary gold mines? Okay? So you can call me all these names. I'll just mute you or block you on Twitter. You're a stupid troll. You're probably a cheapskate loser who doesn't want to contribute to this podcast at all, doesn't want to be a subscriber to my YouTube channel, still going to bitch about the audio quality, and doesn't want to be a Patreon contributor despite my hard work. And, the higher cost silver producers who had bad margins or who had sold gold or silver streams in the past at bad terms, they have been on a buying spree of producing gold mines for years. And so these companies, the three largest primary silver miners that, in my opinion, if you've gone back on past videos throughout this year and seen these are mostly short videos where I've talked about this, is, Coeur d'Alene, Hecla, and SSR Resources. SSR used to be called Silver Standard, but they bought at least one producing gold mine. I think they have two now, and it's called SSR Resources. It's a rebrand. And basically, these companies, they have large mines for producing silver. They have the large nameplate production numbers, but they just are not low-cost, efficient producers, okay? There's either problems with management or continuous operational problems at the mine. There's also, in general with mining, and we'll talk about this later, we'll talk about a book I think you guys can download, an ebook. It used to be an old hard copy book, but it's out of print, and it's very, very expensive now. But you can still find the ebook for free, and that'll teach you how to learn about business in general. It teaches you about the different businesses and how to understand business in general, and also about really sound long-term value investing. It's from one of the top value investors and hedge fund managers for decades. So we'll talk about that as well. So let me get back then. A couple other things before we get on to the main thing. So I want to thank all my Patreon contributors. I have, I think, almost 60 Patreon contributors now. So it's not bad. It's pretty good. Considering, I've been doing this podcast for many, many years, it's actually low. And there's a lot of podcasts out there that do not put in the work compared to me, that have twice or 3 times as many Patreon contributors as me. And I would say the quality of the work is nowhere near as good. There is the new one, Quote the Raven, from Christopher Irons. He's off to a really, really good start. I think he's been doing his almost 5 days a week now for 6 months, and he already has 100. I don't know how he has over 100 Patreons contributors compared to me, but maybe I should ask him, or just my listeners are just cheapskates. I'm really not sure. Maybe it's a combination of the two. But hopefully people will step up, because, guys, like, I'm not sure if you guys are aware of this, but if you're doing podcasting, I know some of my other listeners do other podcasting genres besides what I do in investing in the economy, that recently, starting a couple days ago, Skype has blocked any third-party applications, and that is preventing me from using my recording software. And I knew this was going to happen, so I was talking with other podcasters, and I was researching this with articles and trying to figure out a solution to this. And I think I do have a solution to this, but it's going to cost me considerably more. So basically then, despite, me already not making really any money off this podcast, my costs are going to go up considerably, more than double. If I still want to continue to interview experts in their field about investing in the economy, all these different subject matters, for free for you guys. If I decide I want to continue to do that, my costs are going to go up considerably, because I'm going to have to subscribe to a service like Zencaster on top of also paying my audio editor. So, my costs are going to rise. The setup I was using up until September 1st was Pamela recording software. I had a couple other different recording softwares I would occasionally have to use, and then I was using Skype. And so the audio quality there was low, but you were getting a pretty decent, considering people didn't want to pay for the content quality, people were getting pretty decent call quality, although, I do have tons of people who complain about the call quality for the podcast. It's very unfortunate. I know we have a lot of people overall who are very, very happy with the content they're getting, considering it's free, and also a lot more thumbs up than thumbs down for most of the interviews. But there's always, it seems, one bad apple that can ruin the bunch. And, guys, I'm really, frustrated and angry and pissed off at just my life in general, and how, I thought I would have landed a really good investment analyst job or hedge fund analyst job doing a lot of this content for you guys, or even been able to raise money for my educational technology company, or find 1 or 2 other good business partners that were actually reliable and actually had some money and could actually, I probably shouldn't say the rest. I probably shouldn't say any of the rest on my rant here. I don't really want to piss Mo off too much. Mo's already pissed off at me, even though Mo didn't file the taxes for the Wall Street for Main Street LLC in the 4 months he was here in 2017, and so he got me in trouble with the IRS. So Mo was here for 4 months in 2017, and then he didn't bother filing the taxes after he left, and then that got me in trouble. Thankfully, that issue is resolved. But anyways, though, if you guys have been longtime listeners, thank you. If you're Patreon contributors, thank you. And we'll get back into the content. Okay, so I've been looking for a long time at the different miners, and Coeur d'Alene is considered, my research and talking with other people inside the mining industry, Coeur d'Alene is considered the highest cost primary silver miner. And Coeur d'Alene, the ballpark numbers I was using earlier this year, and this was with a higher metals price and also with lower energy prices, mind you, Coeur d'Alene was making a decent profit, $1 or $2 ounce margins, when the silver price was higher and the oil price was lower earlier this year. And, now I think Coeur d'Alene, unless they've figured out some type of miracle, I know now Coeur d'Alene, I'm about to say Coeur d'Alene, in my educated opinion, is losing a lot of money now producing silver, but they probably are making money pretty good margins mining their gold still, because gold prices are holding up better than silver. But Coeur d'Alene produces over 10 million ounces a year of silver, way over 10 million ounces. I think it's maybe 18, or at least it used to be 18. It's around 18-ish. And, so an annualized rate, unless Coeur d'Alene miraculously cut their costs, and with higher oil prices, that's going to be hard. With lower metals prices, that's going to be hard, especially in the mining industry, where you need to maintain margin, you need to have free cash flow, and that money has to be poured back into maintenance capex routinely. You can occasionally delay things, but Coeur d'Alene now, I have Coeur d'Alene losing, my educated guess, almost $3 per ounce on their silver. So every ounce of silver they're producing now, they're losing almost $3 per ounce. If silver stays below 14, maybe goes to mid to low 13s, Coeur d'Alene will be losing more than $3 per ounce. More than $3 per ounce. And so for a short amount of time, the miner can do okay. So they can delay some things. They've high graded in the past. There's some games. The problem, as I've explained, is that there's not a lot of capital available for the industry in general anymore. So you're now at terms, especially with gold and silver being in bear markets and the miners being in bear markets now for 7 years. And when gold and silver did have a rally briefly, end of 2015 and for part of 2016, most of the miners raised a ton of capital. So they were not really bullish on gold and silver long term. They raised a ton of capital then because they didn't want to risk bankruptcy. So they went to the market and raised a ton of capital then. But that capital that was raised over the years and even briefly in that small window I just mentioned, that capital is not available now. So you're looking at very predatory terms for a lot of these miners to get any type of capital. For the big five royalty and streaming companies, a lot of the royalty and streaming companies are probably not even going to want to give some of these larger miners a large amount of capital for royalty or stream. It depends on the cost of the mine. So Coeur d'Alene is probably the highest cost primary silver miner in the world, and the next highest one, in my opinion, based on my research, would be Hecla. And so Hecla's bought, I think I did a short video on this about 4 or 5 months ago. Hecla has bought, I want to say, 3 producing gold mines in the last 5 years. So they've drastically diversified their revenue mix and their production mix because they know that on their silver production, their margins were not good. So these companies like Coeur d'Alene and Hecla, had they not bought those gold mines, they would be worse in the danger zone. We're talking like bankruptcy potentially within half a year or 3 or 4 quarters. AJ Scarp. Okay, so if I take a break, guys, it'll be for one of 3 things. I will either be reading your questions and announcing them out loud for everyone to hear them and me to potentially answer them. Again, not financial advice, stupid disclaimer. Or I will be taking some water, or I'll be conducting my notes. So, the 3 highest cost large primary silver miners are Coeur d'Alene, Hecla, and SSR Resources. So I have Hecla losing a little bit more than $2 an ounce on their silver, but like I said, they've been buying gold mines, so on their gold production, they're still pretty good. Now, if the gold price crashes too, like what has happened in silver, things could change. But these primary silver miners on their silver production, some of them are really hemorrhaging cash. Like it's really dark times. You are not in a stealth bull market if you are losing $2 an ounce or more on every ounce you produce. You're not in a stealth bull market. Okay, it's almost a drinking game at this point. I don't even know why those people are repeating that. Do they do any research? Okay, so let me check my notes here. Okay, I want to talk about the First Majestic Silver case study for you guys. So First Majestic Silver, in my opinion, based on my research, looking at the different costs throughout the primary silver miners, especially the larger ones. Now, there's smaller primary silver miners like Great Panther and others. I could easily look up their information and stuff, but their total production amounts don't really matter too much to the whole market. I focus more on the big guys as a general picture. And their business model, Great Panther Silver, is they buy old mines and they renovate them. So it's kind of like you have a really good mechanic and you go out and look for used cars that are way undervalued, and you want to plan on driving, improving a used car and driving it for 10, 20, 30 years. And that's kind of the business model that Great Panther Silver and Endeavor Silver have. It's a different business model than First Majestic Silver, than Coeur d'Alene, than Hecla, than SSR. Because Endeavor Silver and Great Panther Silver are not going out and bidding for very large land packages that have been drilled off, that are long life mining assets that are very high capex. They're really not doing that overall. Maybe they've changed things a little bit, but when I was studying all these different companies, they were not doing that type of business model. Okay, so back to First Majestic Silver. So First Majestic Silver, other than really Pan American Silver, who's a really low-cost producer, the last time I looked at Pan American Silver was maybe a couple weeks ago, and they were reporting all-in sustaining costs around $9 an ounce, which, as you guys know, is probably understating costs, so their real costs are probably closer to 11-ish, maybe 12. And Fresnillo, which is on the London Stock Exchange. Fresnillo is actually an interesting story because they all had an enormous amount of silver production out of Mexico, but even Fresnillo now has gotten into this diversification I've talked about, and I believe Fresnillo has more gold revenues annualized now, annual gold revenues now than silver revenues. And Fresnillo and Pan American Silver are the two largest, lowest cost primary silver miners. First Majestic is in that lower quartile, the bottom 25%. So they're in that discussion for lowest cost producers. This is overall. So recently, though, First Majestic Silver did a large acquisition, and they announced their Q2 numbers, and they were having some problems with all-in sustaining costs. I pulled up the PR because I wanted the press release from their Q2 earnings. So they announced all-in sustaining costs of $16.43 for the Q2 2018, a 3% increase compared to Q1 2018, but they're announcing guidance of taking all-in sustaining costs back down to $13.28, $14.84 per ounce eventually. So they expect the cost to go back down. Now, earlier this year, before First Majestic bought San Dimas, which overall in the long term is probably a good acquisition for the company, that's a really long life gold and silver mine. There's a lot of potential for exploration. That mine adds a lot of ounces of production for them, and that mine could be running for a long time. But earlier this year, and this is, part of this First Majestic case study I want you guys to know about, that, even these newsletter writers sometimes don't even do this type of research on this, or I don't subscribe to a lot of newsletters anymore in the mining industry. I used to. And I used to get some copies and stuff for free. I don't know if some of the mining industry guys don't like me too much anymore. But because I'm being more honest with the challenges that the industry faces. And so for First Majestic Silver, they were claiming all-in sustaining costs earlier in the year at around 12. But I was looking at their financials versus their all-in sustaining costs, and I had their number higher. So 12, when the silver price was higher, they had a nice margin. Even if they were understating their costs a little bit. But, now First Majestic Silver is temporarily having some cost problems. So, and the other thing I wanted to mention, and this ties in, was that Keith Neumeyer, who I've interviewed many times over the years, I've asked him questions that many people in the other YouTube channels will not ask him. Like I asked him, why doesn't the gold and silver mining industry hedge their oil costs? So when the oil price was lower earlier this year, why didn't the miners hedge their oil costs? They would know they would have like a fixed cost. And he said, bluntly, too much upfront capital. He's like, the miners would rather pay as they go. And so this is a dangerous game because the oil costs could rise a lot. We've had a big rally in the oil prices, and the oil prices have not collapsed. Gold and silver prices have gone down, especially silver, and oil prices have gone up for most of this year, especially since summer of 2017, and they're holding pretty strong here. So that's a double whammy for primary gold miners, but especially primary silver miners, because silver price has gone down more than the gold price. So, and at least 30% of all input costs for miners is oil and energy costs, so diesel, etc. So there's a lot of fixed costs. So there's a very interesting presentation, and I watched the presentations because from some of the CEOs and executives at places like the European Gold Forum. I believe it was the European Gold Forum. It might have been the Denver Gold Forum at the end of last year, but I'm pretty sure it was the European Gold Forum earlier this year. And so Keith Neumeyer was actually giving the presentation about First Majestic Silver. And he was talking about his costs, which I found very interesting. But what basically he was saying was we cannot lower the costs anymore, and he was outlining why. And he said, we would love to lower the costs more. The problem is we have been delaying maintenance CapEx, and we need to invest, over $50 million more into mine optimizations and other fixed asset investments in order to continue to lower the costs. And he was like, frankly, we're not making the type of margins, we're not making the type of free cash flow needed to reinvest into our own mines, pay off maintenance CapEx, and then make the other additional investments, long-term investments, to keep lowering the mining costs. So, and he said, we don't want to go to the capital markets and take on debt. So he was basically like, if the silver price went higher, then we could have the margins, and then we could reinvest that into our operating mines and start lowering the costs below the claimed all-in sustaining cost earlier this year of 12. And this gets me to the book I wanted to talk to you guys about. So there's a book out there called by Seth Klarman. He's a famous value investor and hedge fund manager, called Margin of Safety. How many of you guys have read that? So the book is out of print. If you tried to buy it on Amazon, the hard copy of the book, it'd probably be paying hundreds of dollars, if not more. There's very, very few books. And it's viewed as one of the top business books and value investors books. I think he wrote it almost 25 years ago. A lot of value investors, when you ask them for book recommendations for how to understand business or how to understand long-term value investing, they recommend this book. But you guys can get the ebook. You should be able to Google Seth Klarman's Margin of Safety and get that book for free. You should be able to download the ebook. And I've read a good amount of that book, and there's some really good insights into there, talking about a lot of different businesses in a lot of different industries and what to look for in long-term investments in terms of if the business doesn't have too much maintenance CapEx, the margins, how it can generate what types of businesses can generate free cash flow, etc. And so in this Margin of Safety book from Seth Klarman, there's a couple paragraphs at least in there from what I remember about mining. And he talks about, for a short amount of time, if you buy mining stocks, you can do very, very well. But if you buy and hold, the mining industry are bad businesses. And for a while now, we've had bad CEOs, but mining in general is an inherently bad business. And the problem with mining is the maintenance CapEx. So when a mine is up and running, it can generate a good amount of cash flow. But it's difficult to maintain the margins at a mine. There has to be a lot. There's always things that break down. There's problems with the crushing mill. There's all these moving parts. If you've seen Steve Sanangelo's excellent work, he's talked about the costs at one point of truck tires, of those massive Caterpillar earth mover tires, the cost. So there's all these fixed costs, and then you have variable costs with the oil and diesel prices. And in general, it's just a lot of costs. And this is why you don't have consistent margins at a lot of mines. Now, you do have good cash flow if the mine can stay operational. You just don't have consistently good margins. And this brings me back to, people are going to say, the miners could just figure out ways to cut more costs. Well, maybe for a short amount of time they can if the silver price does go lower. And if so with an economics textbook, with supply and demand, what is supposed to happen is that when price drops too much, supply is supposed to be reduced. But in actuality, what happens is because the miners need the cash flow, and a lot of them have bad balance sheets or they have bad debt, they actually don't reduce their production. They don't. So unless they go bankrupt. So if they actually, they'll be producing up until the day they go bankrupt, a lot of these miners. There was a company named, I think, Holdra Silver. It was a small primary silver producer about 4 or 5 years ago. And they were claiming in Canada to have really low cost silver production, and they just didn't meet the numbers. There was problems bringing the mine online. The costs were nowhere near what they claimed. And, they were producing cash flow. They just weren't making margin. So they had borrowed money to bring the mine online, and then they couldn't pay back the debt. They couldn't get refinancing. They couldn't sell enough equity shares because the silver price had already started to fall, and they went bankrupt. But I believe they were producing up until the day they went bust. But the mining company, a lot of the higher cost primary gold, especially primary silver miners, now they're on their gold production, they should be in better shape. But on their silver production, the point I'm bringing is that some of these guys are now losing $2 or more per ounce. And if the silver price goes lower, they're going to be losing even more. Now, in the short term, for a couple weeks or a month or a couple months or even a quarter or two, this is not too bad. This is not too bad. But, on an annualized rate, if you're producing over 10 million ounces of silver a year and the silver price, you're losing $2 or more per ounce for a year or more, then your losses start to really blow out. So the miners are close to a tipping point, and the silver price, the paper silver price, it seems like the shorts are in charge. The shorts are still in charge, excuse me. And the dollar index, when we're doing this live stream, let me pull up Yahoo Finance really quick. Dollar index is still around 95, so we haven't had a fall in the dollar index too much. It hasn't gotten above 96, but also hasn't fallen too much. Okay, let me take a sip of water and let me check my notes, and then I'll start reading some listener questions. Yeah, and at this point, with the larger primary gold and silver miners, the phone is probably ringing off the hook for the largest gold and silver royalty and streaming companies. It's probably almost like many times a day now. It could be like from the movie Wedding Crashers with Stage 5 clinger stuff, with like a really bad ex-girlfriend or boyfriend that some of my listeners have had. It's kind of that bad, probably. It's that type of desperation. Yeah, so there's no stealth bull market in gold and silver. In fact, like when you have mining companies losing, some of them are losing over $2 an ounce now for every ounce of silver they produce. This is dire. This is dire. And if silver gets close to 13, I mean, it's going to be even worse. The losses are going to hemorrhage. And like I said, there's not really a lot of capital available at this point anymore. So I've covered what oil prices mean for margins. You can kind of, if you're a trader, more short-term oriented, if the oil price were to fall, that would really help out and stay there low for a while. That would really help out primary gold and silver miners. But it looks like the oil price is staying pretty firm at these prices. It may even go higher. So that would be bad, especially if gold and silver didn't rally. That would mean that the margins are going to be worse for Q3 and Q4 of this year. One of my followers on Twitter told me 2 other VIX leveraged ETFs also just died, that around $6 each, that the owners of the leveraged ETF said they don't want to operate them anymore, so that's interesting. Let me keep going through my notes, and then I will also start answering your questions towards the end. Did you guys see some of the stupid tweets out from these Hollywood star people about Judge Kavanaugh? All this stuff that's going on yesterday and today. Some of them are demanding that all of Kavanaugh's emails and notes are released too. Hypocrisy, right? I mean, like, no one wants the Hillary Clinton emails, all 33,000 released, but yet if you're a Republican, if you're a Republican somewhere going into a prominent position in government, they want full transparency. But if you're a corrupt Democrat committing felonies left and right, you can get away with pretty much whatever you want. No normal. Oh, and I saw something really interesting over the weekend. Judge Andrew Napolitano, this was from the Mises University. So he gave a speech, and he was actually talking about, really interesting things about the Constitution, and then he started talking about the Patriot Act. I did not know this, but when Judge Kavanaugh was a young lawyer fresh out of law school, he was one of the writers of the Patriot Act. Ugh. Oh, man. From the frying pan into the fire, right? From the frying pan into the fire. So basically, if Judge Kavanaugh does get on the Supreme Court, it looks like we may have even worse than the Patriot Act coming with spying. Full totalitarian government. Maybe a similar social credit system to what China has. The U.S. and China are not that different. Especially, the U.S. is just more hypocritical about it and covers its tracks more. And the big tech companies do the heavy lifting. We don't know how involved the U.S. government still is with the big tech companies. But, there's a lot more similarities than differences with freedom of speech now, unfortunately. Especially if you're a short seller. I was watching Quote the Ravens podcast and listening to the stories of some of these prominent short sellers that he's interviewed. He's done a great job over there. And some of these guys, they just write an article saying they don't like a company and outlining why they don't like the company. Seems pretty normal to me, and they're getting sued. That's crazy. That's crazy. And I am working on some big name interviews, but like I said, my costs are going to be rising, so if you do want your questions answered in the super chat, if you do want your question more likely to be answered in the listener Q&A for this live stream, you can tip me with super chat. But I am working on booking interviews in the near future for very big name investors or traders like Mark Cohodes. He's a legendary short seller. Pretty famous guy. He was interviewed by Real Vision TV earlier this year. Really good interview if you have a Real Vision TV subscription. Mark Yusko, he's a hedge fund manager, and he also just launched a cryptocurrency index fund. I'm working on getting him on the program. Victor Sperandio, he was one of the top traders, hedge fund traders for George Soros's quantum funds, and he's a very well-respected trader. So he's called Trader Vic. I think he has a number of famous trading books out. I spoke to him in emails yesterday. So if I had already set up Zencaster, I probably could have interviewed him this week. I haven't set it up yet. So I probably will set it up maybe next week. And then Porter Stansberry. So I've been in contact with his people. So I'm going after the big name guests. Please name me any other free podcast, either on YouTube or iTunes or anywhere else that can get some of those big name guests on in a month or two span. There's really very little. Even like the investors podcast guys who have like over 100,000 subscribers on YouTube and like all these iTunes downloads, like I don't even know if they get that type of guest list. A lot of their interviews are pretty basic anyway. Their disclaimer is really horrible too. I'm surprised no one has attacked them on that. I actually have a thorough disclaimer. Their disclaimer at the end of their audio podcast is, this content is only for entertainment. That's all it says. Okay, well, I think I've covered pretty much all the notes I wanted to cover here, and we can start answering some listener questions, except for the cheapskate losers who keep commenting about the audio problems. So if I recognize your name that you've been bashing me for the audio problems, there was one guy, I'm going to call this guy out. I don't remember his name. I think it was like Jinta Johnson or something. And this guy commented underneath my Dave Skarica interview. And by the way, Dave spent an hour of his time, and I spent over an hour of my time getting that content out. And yes, Dave is in the Bahamas. It was a Skype call. The call quality wasn't perfect. Overall, I think the call quality was pretty decent. I had my audio editor repair it the best he could. And, this guy, he was saying really nasty stuff about the whole thing was unlistenable and that, I shouldn't say anything bad to him and all this stuff. And I asked him, like, are you even a subscriber to my channel? He's like, hell no, I'm not going to subscribe to your channel, blah, blah, blah. You're way too arrogant and cocky. And I was like, you don't even have I don't respect your opinion because you're not, number one, you're not emotionally invested. So you're not a subscriber to my channel. That costs you nothing. Okay? You're not a subscriber to my YouTube channel. Not going to listen to what you say. And you're not a Patreon contributor. Those are the people I care about the most right now. Some of you guys are great, but, there's always, like I said, a couple of bad apples that ruin the bunch. Okay, so let me get to your questions. There's a bunch of them. Clint Eastwood. Okay, that's not your real name, but hello. Clint Eastwood, after that imaginary chair thing, a while ago, that was pretty ridiculous. But Clint Eastwood is a libertarian, at least he claims to be, but I think he votes Republican, but he claims to be a libertarian. Cool Hand Luke, back up the truck and load up now. I mean, if you're patient with silver, it's not like I've said, not the silver is not an investment. I've said this on the last live stream. I've said this many times over the years. It's just for insurance and wealth preservation. Physical silver, you're not going to get rich off of. So if you just want more insurance, if you just want more wealth preservation to preserve your purchasing power in today's dollars compared to what's going to happen in the future as everything gets devalued, as all these main governments continually devalue their debt-based digital fiat currencies, then that's fine if you're patient. But a lot of people have given up. A lot of people have given up on gold and silver companies. A lot of people have, I know a good amount of libertarians that are Facebook friends with me that have sold their gold and silver. There's been a capitulation. It started about 1.5 years, 2 years ago, but it's been increasing. There's just been people that have totally given up, that don't think that the manipulation will end. We're going to have to see how many gold and silver miners go bankrupt. But, for production levels to be maintained, there has to be investments. There has to be maintenance CapEx. There has to be OpEx. There has to be long-term investments in exploration. So I really don't... I think, in my opinion, you guys have listened to my videos. In my opinion, the main way that the supply level for silver has been maintained is with the silver byproduct from copper and base metal miners. And I'm pulling up we have $2.62 a pound copper. If you go back and listen to my Rick Roll interview from a couple weeks ago, he said that $2.50 a pound copper is around the price where a lot of copper miners are really going to start to struggle. So copper miners are not in good shape now. They have hedges, but they're getting really worried. But as those hedges come off, because they've hedged their primary base metal mine production, plus their byproduct of either gold or copper or whatever, as those hedges roll off, the copper miners are going to be scrambling. Because it sounds like, according to Rick Rule, that a lot of these copper mines that have been brought online are not $2 a pound, very, very low cost copper mines, that the cost of a lot of copper production has been raised. But the way that they've been able, the manipulators, the bullion banks, and Bill Murphy supposedly published my email in his newsletter that I sent him. I sent him a long email explaining my thesis with that the supply is provided by base metal miners, silver byproduct, and that's how they're allowed. It's like a very fine tightrope that they have to walk, and it requires a lot of work to do this type of manipulation, because they're trying to knock the paper price down, but they also still need the supply. And that's how they've kept the supply levels high while also knocking down the paper price. And if you look at Lewis's work and Louis Camersano's work of Small Gold and other people's work, it looks like silver demand is still very strong, especially out of India and China. It hasn't fallen, so it's still very strong. And, there's a lot of industrial demand for silver overall, although retail demand for silver as an investment is down. Okay, let me look at more of your questions. Oh, thank you for the $10 tip. I appreciate it. What's this? Okay, I'll find your name out in a minute. I'll scroll down more. Nomadic Giant, your daughter's wedding gift. So you're giving a dowry? Is a dowry required? Or was it just something you decided to do because you're a nice guy? A good dad. Lawan Corwin, what do you know about Jpmorgan canceling silver shorts? We don't know. The only thing we know is the commitment of traders stuff, and even that, because they've been fined on that, we don't know how accurate it really is. We do know that for the first time, basically, Turd Ferguson said this on Twitter at the end of last week. He said for the first time in the 15 or 20 years he's been following the silver market, that was the first time he can remember that the commercials were net long. It's only a little bit of net long, though. They're not massively net long. I think it was like 2,000 contracts net long. So, I mean, it's not massively net long for the commercials, but the specs, the hedge funds, are super net short. Like, they're piling on and piling on and piling on. They're blowing out stops like crazy. And so this is a run on the silver market. But, if some of these primary silver miners, the higher cost ones, go bankrupt, this will be good in the long term. I'm just not sure if they're going to go bankrupt immediately. They've been figuring out ways to save themselves. But as I've outlined in other live streams and other short videos and other interviews, the gold and silver miners, to save themselves, to delay bankruptcy, a lot of them, they've sold off a lot of their non-core assets. The silver miners have moved most of their revenues into gold. A lot of the primary silver miners, especially the higher cost ones, they know their margins are bad. They won't talk about this publicly, by the way. But you can see this in their investor presentations, how 50% or more of their revenues are in gold. And you can see with their acquisitions, they've crazy been buying producing gold mines instead and not really focusing too much on silver. $5 penny. Oh, you like my rants? That's great. That's great. I appreciate it. Cool Hand Luke. Bunch of poor people here. I don't know if everyone's poor. I know hedge fund managers and very sophisticated financial professionals listen to my comments because I occasionally get emails and I get stuff on Twitter. So they should be willing to be Patreons or, honestly, when I was doing all this work, I thought I would have a really good day job for $50,000 or $65,000 a year, and then I'd be able to take the profits from that and build my business, build my podcast. And because I like doing this content and interacting with you guys, I could do this almost for free or not make too much money off of it and then go and raise the money I needed for my educational technology company. But, this year has been just god awful. Pretty much anything that could possibly have gone wrong has in the last year or two. I thought I was going to have 2 business partners up until March, and then that thing just went totally sideways. They tried to steal this YouTube channel and my educational technology business plan for under $10,000 in cash, and they were going to change the name, they were going to change the content, and they were talking about kicking me out. So they were talking about, kicking me out of the company and not letting me do any of this content that I'm doing now. So I walked away from that deal. Just so that way I'm being transparent with you guys. I thought, these business deals, there was 3 business deals I thought this year that would have went through, and I worked very hard on them, and they all blew up. And one of them is a signed contract, signed paid advertising contract with a company that's publicly traded on the Toronto Stock Exchange, and they still screwed me over. If I had more money, I'd sue them. They deserve it. .com. If you're worried about $14 silver, you're too heavily invested and thought it was a get-rich-quick thing. No, I'm just analyzing the market from supply and demand. So I'm analyzing the market from bottom up. So I'm talking about how normally in a regular functioning market, if there was strong demand for the actual metal or if there was increasing demand for the physical metal, as I think Louis Camersano does a great job over there, that there's been strong demand, if not increasing demand, for physical silver out of India. I think, I forget the exact numbers, but there is increasing demand on the industrial side, and it did not move the price at all. In fact, the paper price for silver, when the Indian numbers came in a couple months ago, when there was a huge increase from Indian physical silver demand, that on a normal functioning market without manipulation would have driven the price higher, the paper price actually fell. Twilight Zone. Wellness 81. Operation continue accumulation. If you're a patient man, you can do that. Most people have given up. Most people do not have discipline. They do not have patience. I've run into tons of people through whether they're older retirees or whatever, that have claimed to be long-term investors, and then if a stock doesn't go up in a month or a couple months or even 6 months, they give up. They don't buy more. They claim that, I'm a long-term investor, I'm a value investor, and then they don't do it. So they don't do their homework, they don't do additional research to see why a company stock or whatever is falling, and they just give up. So it's a new normal. It's a new normal now. I've tried to demonstrate this on my Twitter feed, and also, in my discussions here on the live stream and elsewhere with some anecdotes. We live in very dangerous times. There's a lot of crazy, desperate, irrational people out there. Please don't be one of them. Hopefully you guys are making sound, rational decisions most of the time, and you're not degenerate gamblers that are going to sue me or call the Virginia Securities investigators on me and make up lies about me. I don't want to go into any more details. But we think we know the person who reported us, and he's not a good person. Let's just put it that way. He's a really bad guy. Speed Sprint 100. That's that miner's other... Okay, your grammar's bad, but I think you meant that that's the other miners that I mentioned, and you're claiming that some silver miners mine silver at $5 an ounce. Please name the silver miners that mine $5 an ounce, and then I will look at their financials, and then I will tear your argument apart. There are no silver miners, really, that have any mines anymore that can mine silver at $5 an ounce. The new silver mine that's supposed to be the most robust project economics is Mag Silver's mine that Fresnillo is bringing online. And that silver mine is supposed to be around $10 an ounce, all in sustaining costs. And that thing has super high grade. I think it's over 400 grams per ton grades. And it's supposed to run, I've heard really crazy estimates about how long the mine can run, etc. There's some estimates out there. One of the geologists for Mag Silver, this is obviously not financial advice and forward-looking and just the opinion of this geologist, but I've seen a presentation at the Denver Gold Forum and the European Gold Forum of one of the executives at Mag Silver, and he thinks that silver mine is going to run for potentially 100 years and have over 1 billion ounces of silver. So I don't know if he'll be right or not, but I probably won't be alive to know. But that is a very high grade, very low cost mine, and their all-in sustaining costs, Speed Spirit 100, is 10. And if I've outlined anything in the last year or two, I think you should know that the all-in sustaining costs for basically every single primary gold and primary silver miner is not accurate because it does not match their financials. Because if they had the free cash flow that they were claiming, if their costs were as low as they were claiming, they would have a higher free cash flow. I've showed this. It's not that hard to do. $5 penny. Only silver for you, maybe Dr. Copper too. I wouldn't expect an enormous appreciation in the copper price. The copper price is already appreciated enormously, almost entirely on Chinese demand. Artificial Chinese central planning. The copper price was only 40 or 50 cents about 20 years ago, give or take, and the copper price has gone up enormously. And almost all of that demand is demand that China has pulled forward with central planning. So, if you look at the growth statistics for the copper market, there really is no growth for pretty much anything else. There's people speculating that there will be growth for copper from electric vehicles, but it will nowhere near offset the demand that China has for copper. China is the copper market. People who are copper bulls, I've gotten in arguments in the past with Mickey Fulp and Rick Rule about this. They don't want to hear this. Rick Rule is an Austrian school economist, so he should know about central planning. But I think he has copper investments, so he's kind of talking his book on that. But I do agree with Rick. I think his cost estimates are accurate. He spends more time looking at costs of the copper miners than me. But there's a lot of copper mines that could come online if the copper price does rally again. Say it goes to $3 a pound, or $3.20 or $3.50. There's a lot of very marginal, higher cost copper mines that could come back online or be built. There was a ton of exploration for copper when China announced, all this stuff in the last 10, 15 years. Copper has had an enormous amount of exploration. It's definitely not underexplored. I've heard people say it's underexplored. I don't think so. AJ Scarp, is the free market, supply and demand, price discovery broken? How is silver so cheap? Yeah, there is no price discovery in the silver market, because if there's new physical demand announcements either out of China or out of India that are massive increases, the price goes down. The price goes down. So this is not a functioning market. A rational market would be if there was announcements for data for imports for physical silver that that many hundreds, if not another 1,000 or 2,000 or 3,000 tons of physical silver was just imported to India, and they're projecting demand increases, and then the price goes down, and it's a head scratcher. But this is the market we've had. It's been this way for a long time. And it will keep going on this way until it blows up or the silver miners go out of business. Obviously, the people who are manipulating the market are not going to get prosecuted for it. What you've seen, though, with the primary silver miners, especially the higher cost ones that I've tried to emphasize here with my points, is that I don't think a lot of the silver miners will admit that silver is manipulated, except for Keith Neumeyer, but they're voting with their money and their feet, and a lot of the silver miners are quietly diversifying out of the silver business. But they still need the supply, and that's where the copper miners and the base metal miners come in, because for the annual physical silver supply, there's twice as much silver byproduct that's mined as primary silver miners. $5 penny. Can Americans buy weed stocks? There is larger marijuana companies in Canada on the Toronto Stock Exchange. It depends on the online broker that you have, how easy or not that is to buy. So E-Trade, I think, this is not financial advice, this is just me showing E-Trade. I don't think you can buy directly on the Toronto Stock Exchange. I think you can if you have a Forex account too. You have to have a Forex account too. I think in order to buy directly on a foreign stock exchange, you have to have a Forex account too. Otherwise, you have to buy over the counter on some of these other online brokers like E-Trade. Now, with Interactive Brokers, I believe you can, if you sign up for Interactive Brokers, you can buy Canadian marijuana stocks directly on the Toronto Stock Exchange. But there are a lot of penny stocks for marijuana, and they all sound like they're selling a good business plan, and there's been a boom for a while. I that's not my expertise. I would read like the Marijuana Business Journal, and I would look for companies that are booking contracts. You want to see a real balance sheet here where the companies aren't going to dilute. So again, not my expertise. I would read articles from like the Marijuana Business Daily and some of the other publications. There's also some newsletters out there that charge, but the Marijuana Business Daily has a lot of articles on like Canadian marijuana companies and American ones, and how they're figuring out ways around the regulations or complying with them to grow their business. But I think a lot of these states in the United States are going to be copying Colorado and California. They're just so damn desperate. They're raising property taxes, a lot of them, and they need the tax revenues from gambling and marijuana. There is no gajillion dollar market, $5 penny. And even Apple at $1 trillion is probably overvalued, especially when they're using debt. And it's become an old stodgy business, and now you have them buying back shares with company money and an insider's dumping the stock. Matthew Henry. Metal will not save you. If the shit hit the SHTF, would be looted within half an hour and shipping will stop. We are talking total unemployment. Most of the people who own gold and silver also own lead bullion. They believe in the Second Amendment. So I would be very careful. So just I wouldn't expect to be a pirate and that everyone will be easy to fleece. But yeah, I mean, you do bring up an interesting point that, yeah, metal is not the perfect solution. It's not a panacea. It's not perfect. But I don't know. I honestly think that I think the people in power would rather create hyperinflation or just revalue the dollar like FDR did in 1934, or issue a new dollar. Jim Willie and some of the other experts out there have predicted for years now that the U.S. and some other countries would potentially just reissue new currencies, and I think they would rather do that. That almost happened with the euro. So I believe that the euro was almost disillusioned in 2000. I want to say 2010 or 11. This was around the Greece news time, and I believe that there was in German warehouses, there was either tons of new Deutschmark printed or there was a new euro that was going to be issued without Greece in it. I think it was the Deutschmark. So there are contingency plans that these governments have, but they're all with paper money, new versions of paper money. And just because, Matthew, you, me, and the other people that are commenting or listening to this, that are either commenting in the live chat or listening on this live stream are more woke than others, and that we see the world one way, does not mean that most people will not be, okay, the government's going to give me new currency, no big deal. A lot of people are pretty normal. A lot of people are go along to get along. A lot of people will do almost anything the government says. It's really sad. They are scared of independent thinking. They're scared of taking personal responsibility, and this is a new normal that we have. But there's also a lot of people out there that want the government to take more power. They want totalitarian government. There's tons of Marxists. I see them on the dating apps all the time now. I was on a dating app. I need to stop these rants. There was a dating app that I was on over the weekend, and 4 profiles in a row were all hardcore Marxists. Crazy stuff. But I'm sure they still wanted expensive dates that were $150 or more for first dates. Because this is the crazy, wacky DC metro area. Luminary wins. Everyone and their mother is in weed market. I'm not in the weed market, so I'm not in the weed market. Adrian FC82. I've seen you comment a lot, buddy. So good to see you. Thanks for joining us on the live show here. We're almost at an hour, 4 minutes left. So I'll answer a few more questions, and then I'll scroll down for more questions. Well, I can stay on here for another 10 minutes or so. I got back from the gym and dinner, so I can answer some of these questions. Then I gotta ice down my knees after doing cardio and leg press before bed. Adrian, I hope silver drops to under $5. I don't think so. I'm not sure if you were around, Adrian, during the 2008 financial crisis in the silver market or not, but that was very interesting what happened. So the silver market then in 2007 and early 2008, the silver price was, I want to say 17, it was at 21, and then it went all the way down to I think 8 or 9 in a very short amount of time. But if you were around the silver market back then at 8 or 9, you did not get the $8 or $9 an ounce price. Unless you took delivery like of a COMEX futures contract, and you had to wait a very long time. And so the COMEX claimed that they had all the silver in the warehouse, but I know Jim Poplava, and he actually tried to take a delivery of 1 ton of physical silver from the COMEX at the $8, $9 an ounce price. And even though the COMEX claimed to actually have the metal, he had to wait over 6 months to get delivery at that price. And he got all those other charges. And so if you're a retail investor, what you were paying was not $8 or $9 an ounce. I believe the premiums on a lot of the silver products back then were $4 or $5 an ounce minimum. So the real silver price for most people, never actually got to $8 or $9 an ounce during the height of the crisis in 2008. The real silver price was still like $12, $13, $14 an ounce in actuality, compared to what the stated price was. And there was also people doing arbitrage. So some of the more sophisticated people, like David Morgan, silver guru, silver of the Morgan Report, what he was doing was he was buying like Doré bars, and he was buying like 1,000-ounce bars of silver, 100-ounce bars of silver, and then he was paying a refiner to put them into coins and smaller bars, and he was making good profits off the margin. So there was that type of profit opportunity during the height of the crisis in 2008, because the demand for silver was very high. The stated price that got down, that was not that for most people. Most people never actually got that real price that was printed, the really low price. That's the point I wanted to make. Sorry, I was long-winded there. $5 penny, arguing with Matthew Henry. No people are smarter than that. Some people are smarter than that. Not everyone is smarter than that. Common sense is no longer common, unfortunately. I wish common sense was more common, but it's not. And so this is a what have you done for me lately world. A lot of people are irrational. A lot of people are crazy now. by a lot of different definitions, a lot of people are desperate and willing to do almost anything to survive. A lot of people are willing to lie, cheat, and steal to survive or get ahead. The stories, I've had so many people over the years burn me on bad business deals. So many people. And other people have vouched for them too. The new normal now sucks. You have to be very careful. I've had friends in really bad relationships too, where they thought they were in a good situation and then they ran a credit check on the person they were dating, and oh boy, I won't go into any more details. Okay, I'm reading more of the comments. I'm going to answer a few more and then I'm going to go because we're over an hour now. Matt Foley, motivational hate speaker. What's up, dude? Dude, Matt or Chris Farley, you're not politically correct anymore. They don't allow your type of comedy anymore, unfortunately. I used to really enjoy your comedy. It was the freaking best. Richard Pryor, Eddie Murphy, Chris Farley, the old Saturday Night Live cast, those were great. Unfortunately, it's all like hardcore Democrat, virtue signaling garbage, a lot of the comedy anymore. Then you have a guy like Owen Benjamin, and they're trying to ruin his life. Not only are they trying to make sure he doesn't make $1 anymore, they're trying to ruin his life. It's so ridiculous. Luminary wins when corporate welfare ends and corporations' free tax gift runs out, ending the stock buybacks. Silver and gold bull will start. You know, this would have happened already, but the SEC and other people in power in governments and regulatory agencies are not putting people in prison for accounting fraud. It's that simple. If they put people in prison for accounting fraud, we would have already gotten this change. They would have stopped the financial engineering. Instead, it's increasing. There's more new ways. They have to send a clear message. There has to be at least one company where a lot of the main executives, probably more, maybe a handful, but once a handful of the large executives at large publicly traded companies go to prison for accounting fraud, that will send a clear message. It will stop, or at least it will take a break. Bogus fiat. Is First Majestic a good buy? If you okay, so not financial advice, just my opinion. I think First Majestic is probably a good buy, but I would not buy all my position at once here. I would buy a little bit now, and I would wait to see if the silver market fell. And yeah, if the silver market does turn, if the silver price starts going higher, and I think eventually at some point it will have to, then First Majestic will have good margins and they will make a lot of money. But in the short term, anything can happen. Anything can happen. And right now, First Majestic Silver, last month, in their Q2 2018 earnings that they announced, that their costs are higher. But that's because they made a smart long-term acquisition. So in the short term, that's not going to help their financials and their reporting. And they're not generating as much free cash flow now because they have to spend more money on the new mine they just bought. But in the long term, it's probably a good purchase. And I think First Majestic Silver, Keith Neumeyer, his money is where his mouth is. So First Majestic Silver does not do well if the company's in trouble financially. Keith Neumeyer is going to lose a lot of money. So I am a big believer that for long-term investing, you look for owner entrepreneurs, where the owner, the people running the company, actually have a large stake in the company. And either they started the company and they still own a lot of shares, a large stake in it, or they're going on the open market with their own money and buying a lot of shares. This financial engineering game of, share buybacks with artificially cheap debt to beat earnings, to keep your share price higher, to get stock options and dumping them, I freaking hate it. But those stocks are doing well. Okay, the market is rewarding those stocks in the short term at least. Long term, though, if you're I'm a value investor. Value investing has not done well for a long time. Value investors are losing their hedge funds left and right. There's record amounts of withdrawals from value investors. I speak with a good amount of value investors that you guys would know in emails, and they're just shocked. Some of the value investors I know are in all cash. They've been in all cash for a while. They've been waiting for a total flush out, and it just hasn't happened, and they're shocked. $5 penny, what is the CCP? I don't know all these abbreviations. Luminary wins. Top 0.1% run the sheep of their nation. Yeah, I would agree with that, but it's also the universities teaching bad theories. So now you have like basically a lot of kids graduating college and they're brainwashed. Their degrees didn't really give them a chance for a good job, so they're kind of like either serfs or indentured servants or wage slaves. So there's like a new working poor. So you send your kid off to college hoping that, you know, he'll mature and become an adult and maybe learn skills or valuable things. And in a lot of degrees now, these kids are burdensome with debt and they've been brainwashed and learning bad theories or bad ideologies. So some of them even turn into Marxists. Which, if you're a Marxist, you're probably not going to be a productive member of society. Let's just put it that way. At least I don't know any Marxists that are productive members of society. I used to, in high school, I knew some. And in college, I met a few. And they were people, they didn't even like a lot of other people. They were pretty mean. They pretty much hated everyone, actually, a lot of the Marxists. .com, crypto is a Ponzi scheme. I haven't mentioned crypto. A lot of these altcoins and initial coin offerings, there's not really a lot of innovation there. A lot of these initial coin offerings are Ponzi schemes. There's some legitimate innovation from some of these cryptocurrencies and altcoins. There's some. But a lot of them, there's a lot of waste and fraud. But in a free market, you know, that stuff's going to happen. So it's buyer beware. You need to be an informed, educated consumer. I mean, I've said this before. It's not investing advice, but if you can't afford to lose money, you should not be risking any money in crypto. Face value, Social Security is a Ponzi scheme. Exactly, it is. It is. And actually, the funny thing is when FDR started it, you know, the first lady in it, and she didn't put any money in. She got like a lotto check, a giant lotto check, right? The first lady. It's a funny story if you want to go and read about this. And at that time when FDR started Social Security, the age that adult men and women lived to was very low. So basically, at that age, the Social Security was only supposed to be paying out for a couple years maximum, even for the women who normally live longer on average than men. And, you know, with modern technology and modern innovation, men and women live longer, and that's... So in addition to they didn't want to pay, they started Social Security as a Ponzi scheme. It's become even more bankrupt because with improvements in technology and innovation for healthcare, that people are living longer, and that system, the Social Security system, was never designed for that. So there's articles coming out now about Social Security that are claiming it's never going to be insolvent. I've seen like a lot of spin from mainstream stuff claiming there are no problems with Social Security. It will never be insolvent. It's just funny because the way the system was designed, when you initially designed it, you gave a large, enormous check to a lady who never put, when Social Security initially started with FDR, and they did a big ceremony, the lady never put $1 in, and they gave her a big check. So just the way they started it, I mean, it was very fishy. Matthew Henry, no form of money will be worth anything. All the fiat currencies are being intentionally devalued, some faster than others. It looks like emerging markets are in the most trouble. I'm not sure when this is going to reverse. I don't think anyone does. I mean, I've talked with hedge fund managers, and you guys have listened to the interviews with the experts, and I don't think anyone knows when this thing's going to reverse. You got to watch the dollar, though. Maybe there'll be some type of announcement with a plaza court or something if the dollar gets too strong, because President Trump and Mnuchin don't want a strong dollar. But I would watch the dollar index and the dollar exchange rates against other currencies, and when those things start to strongly reverse. We have not seen that yet. So until the dollar starts to strongly reverse, it's probably going to get worse. The emerging markets are going to get killed even more before it gets better. Still reading comments here. Bogus fiat. I live about 20-25 minutes outside of Washington, D.C. If things had worked out with Wall Street from Main Street and my educational technology company and my online business had been successful, I probably would have moved at least for 6 months out of the year, maybe to, I would have probably traveled more and traveled out of the country a little bit and seen some other areas, and then maybe traveled more in the US, but things have not worked out. The last couple of years have been very, very rough. Nothing has gone right. It's been unbelievable. Lady Yelena, California will be okay. The air is better and still free. California is a richer Greece. Okay, California, there is no middle class really in California. It's being totally gutted. A lot of successful businesses are leaving California because they can't afford the taxes and the rules and regulations. California has a lot of assets still. They have a lot of wealth there, but they're not in wealth creation mode. California is in wealth destruction mode. So California is not a place where if you're an entrepreneur, unless you have big back tech money where you can build a business. I spoke with an accountant friend of mine there who lives in California still, and he said like that tons of his clients are leaving. Oh, Lady Yelena, you're in California still? I grew up in Southern California. I grew up about 20 minutes from Disneyland. Okay, Vention 1 Magtau. When Bitcoin hits 16K, you're retiring. You'll keep your cash-ins under... Yeah, in a couple years, I could see Bitcoin back up there. We'll see. There's tons of pro-tech bias. And if China's going to devalue the RMB, there's going to be a lot of money leaving China even faster. A lot of Chinese money has already left China. It's gone into real estate and created real estate bubbles all over the globe. Some of it is legal, some of it is illegal. And part of their credit bubble, and their credit bubble is still growing. But I suspect that a lot of money, if China try to do a large RMB devaluation in the next 5 years, and they have a history over the last 20 years of doing stuff like this, that gold, silver, and crypto could boom like crazy if they do a large RMB devaluation. Cyrus, California is a shithole. Well, it depends what you want, man. If you want to go if you want to go on vacation there and you want to pay a 10% hotel tax and a 10% rental property tax and an airport tax, and you don't want any plastic straws and you're cool with that, you can go on vacation there and you can meet some pretty girls at the beach. There's fun stuff to do there for a little while. But yeah, I used to live in California, and it used to be a pretty good place, but it's just gotten ridiculous. You can't build a business there unless you're politically connected. And, it's very expensive to live there. The middle class, Lady Yelena says she's middle class there, but the middle class is being totally gutted in California. And I see tons of California license plates here in the DC metro area. There are lots of California people moving to Texas, to Colorado, even across the country here to the DC metro area. So I think a lot of Californians, maybe they voted for higher taxes and all these crazy rules and regulations and stuff, and then they end up leaving. Because the reality of the situation in California is that the people who voted for all this stuff and their crazy politicians there in Sacramento, they've made things way, way worse. But California does have a lot of wealth, and they do have a lot of capital, so it's going to take some time for all that capital to be totally destroyed. So California at some point will turn into Greece, because it's being run like Greece now, except that California has a lot more assets that can be liquidated and capital and wealth that can be stolen or liquidated or taxed. Theo Martinez, economy in San Antonio, Texas is pretty good, Jason. And I do love Mexican food. So carnitas and tacos and Texas barbecue, brisket. Is that mostly fracking, the economy in Texas? Is it a lot of oil and energy, or is there other stuff there? Lady Yelena, China is buying all the lands in Washington state. In my opinion, a lot of that Vancouver real estate bubble, I've heard crazy stories about people, Chinese people, sight unseen, paying a couple $100,000 over the asking price for houses and old houses in Vancouver, and then getting back on a plane, buying multiple houses like this, getting back on a plane. So I think there's a housing bubble, a real estate bubble in Seattle now, and I think a lot of the stuff in Seattle is a spillover from Vancouver, the bubble in California. Excuse me, that the Seattle real estate bubble is a spillover from the Vancouver real estate bubble. Matt Foley, sadly, Texas is turning blue. Well, this is what happens, buddy. It's happening in North Carolina, it's happening in South Carolina, it's happening in Georgia, and it's happened in Florida. So what happens is, and I've talked about this at length, is you have Democrats who in their normal states of like New York, New Jersey, Illinois, Michigan, California, they vote for high regulation, high tax, crazy legislation. They and in actuality, in reality, their lives get ruined, their standard of living gets crushed, and then after they voted for this stuff and installed crazy politicians, they vote with their money and their feet and they freaking leave. And so you're seeing this now in other states where these hardcore Democrats that ruin these other states financially, they're leaving other states. They're leaving to states with less regulation, less taxes, and eventually those states are going to get ruined too. It's guaranteed. I hope I'm wrong about this, but I don't think so. And I'll use New Jersey as an example. Most people don't realize this, but about 6 decades ago, New Jersey was actually super low tax, very low regulation, and a ton of New Yorkers moved there because, they wanted more freedom, they didn't want to pay taxes, and look what happened to New Jersey. Okay? New Jersey is now one of the most highly taxed, highly regulated, and there's crazy laws on the books in New Jersey now about divorce. You do not want to get divorced in New Jersey. If you get married and move to New Jersey, don't get divorced there. And then also Martin Armstrong has talked about, the death taxes. There's extra death taxes in New Jersey. Crazy stuff on the books there. New Jersey has good food, Peter. New Jersey has good food. Good Italian food, especially. Here if some people from New York and New Jersey want a good business idea, the mom and pop Italian restaurants, they need to come down here to the DC metro area and open up some good Italian food at a reasonable price. The Italian food around here in the DC metro area, I've been here since 2000, it's garbage. It's all chain stuff that's overpriced. It's mediocre stuff that's way overpriced. Yeah, so my point about New Jersey was that New Jersey initially was a very low tax, very low regulation. The government left you alone, and tons of New Yorkers moved there because they're like, okay, I'll pay less taxes, the government won't bother me, I'll commute. And look what happened in New Jersey now, decades later. Oh, Matt, you're here in DC? Should meet for a beer or something. You can send me an email. Okay, guys. Well, we're almost at an hour, 20 minutes. I'll answer a couple more questions and we're getting out of here. My voice is getting kind of scratchy now. Hopefully you've gotten some value out of this. Yeah, I'm also in Northern Virginia. Yeah, man, email me. Could meet up for lunch or coffee or a beer or something. Rent's going, Matthew Henry, rent is going up pretty much everywhere across the board. Now, obviously, in certain metro areas, it's going up faster than others. But, like, the highest rent areas are, like, New York City, Washington, D.C. metro area, and San Francisco area. So those areas, if you're from other areas, you do not know how expensive your rent is. It is crazy high compared to so many other areas. Okay, guys, well, there's too many messages coming in here, so I'm going to work on wrapping this up for right now. Hopefully you guys got some value in this, and thank you for the $10 super chat tip. I appreciate it. And we'll have to see what happens in the short term. In the short term for silver, it looks like in the short term that silver is probably going lower. The stealth bull market people, some of did they stop saying stealth bull market, or are they still saying that, some of them? Sorry, I'm giggling here. It's just, you can't repeat it. As an analyst, look, man, you can have some bias or whatever, but if you want to be a good analyst, you have to be willing to change your views. And you just can't keep repeating stealth bull market, stealth bull market, stealth bull market, stealth bull market, no matter what. And that's what I do. I look at the miners, and my views have changed. And right now, at this point in time, the people who are going to be making the most money long term are the royalty and streaming companies. Because the copper miners at this price, they're going to be panicking. If the copper price goes a little bit lower, the copper miners are in trouble. Most of them are in big, big trouble too. Jordan Belfort, Trump is going to plunge the markets. Trump doesn't want to plunge the markets, buddy. He's been talking up the stock market. If anything, the people who hate Trump, the never Trumpers, they want the stock market to crash so they can blame it on Trump. Come on, man. Okay, guys. Well, there's too many messages here. We'll see them all after this video is done loading. I'm gonna take a break for the rest of the night, and we'll see if I put out any more interviews for the rest of the week. Like I said, though, I do have to sign up for Zencastr now because Microsoft and Skype totally screwed me over. So if I'm going to keep giving you guys free interviews, and I'm not even sure if I mean, sometimes I wonder if I should even bother doing that anymore, but if I'm going to keep providing you guys with free interviews, I'm going to have to switch software now. Can't use Skype anymore. They're blocking all recording programs. So I have to switch, looks like, to Zencastr. The sound quality will probably be better, but it will cost me quite a bit more to do that. And then I have to still pay my audio editor. And with the problems that YouTube censorship and the bad business deals, I'm just not making enough money to cover that right now. But I guess that's my problem, right? So I wish more of you guys would step up for Patreon, but if I added one or two more business partners here that actually knew what they were doing and were hardworking and had some capital, I would probably be moving more of the content beyond a paywall and or getting funding for my edtech company. So that's it for right now, and we'll talk more. Probably next week. I'm gonna try out Zencastr at least a couple times, and we'll see what happens with it. Victor Sperandio sounds like he wants to come on soon. He was willing to come on, in the last couple days, and I didn't sign up for Zencastr yet, so that should be a good interview. Sounds like I've listened to his King World News interviews in the past, and he's like one of the top traders. He's won all these awards, so that would be good content for you guys. I mean, how many other free podcasts get the quality of guests and all the different types of guests that I have on? Most people are just like gold and silver pumpers now, or crypto pumpers now.